Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is August 24, 2022. I'm going to take a look at the currencies today as the dollar moves higher. Trades new highs in the last few minutes, but coming off of those high levels a little bit as I speak, as up and down trading in some of the currency pairs, not all of them, dominate in the markets today ahead of the Fed's Jackson Hole Symposium, which will start tomorrow and have the big event on Friday with Chair Powell's 10 a.m. speech. Take a look at the euro versus US dollar. This is the hourly chart. And yesterday in trading, the market moved sharply to the upside. We broke above the 99.51.5 level in the process. Why was that important? Well, if you go to the daily chart and you take a look at the low price that we saw in July of this year, that level came in at 99.51.5. So breaking above that level was more bullish. And we went up and tested a 38.2% retracement of the move down from the August high to the low right here, and found sellers against that level, moved back below the parity level through here, and stay below that level, wandering to the downside and trading today. We've seen continuation to the downside toward these low levels near the 99.12 level, where we just went down and tested that level and found some support buyers. We're currently trading at 99.22. So the 51 level remains another reestablished risk level on the top side for the euro versus US dollar. The bias remains moves back to the downside again after the move higher yesterday gave the buyers some hope, but that hope was taken away on the move back below and the move down to new lows through here. The 99 level was near the low price that we saw during trading yesterday, and that will be the next target. If we go below that level, then we're talking about trading to the lowest level since November of 2002. That's a long time ago, like 20 years as a matter of fact. So not a lot of support in on a break below those lows. The daily chart, really you have to go down to this trend line right here to find some support on a break, which is somewhere down in below the 96.75 level, ahead of the 95, around the 96 level, it looks like, for the euro versus US dollar. So a lot of room to the downside if the market breaks and stays below the 99 level. And on the top side, we got to watch the 99.51 level for this currency pair. Let's take a look at the dollar versus yen. This is the hourly chart, and like yesterday in the euro versus US dollar, we saw a sharp move to the downside, breaking below the 100-hour moving average for the first time since this date, August 16th. So that was a step in the bearish direction, but we did find support well ahead, or comfortably ahead, I guess, of this swing area in the 38.2% retracement, and we started to see a rotation back to the upside. By the time that the market had closed, the price was back above the 100-hour moving average. Interest rates originally moved lower and then started to move higher. The market tends to be very reactive to the interest rates, at least in the dollar versus yen. And we started to see some waffling here today, trade above and below the 100-hour moving average. Market doesn't know which way it wants to go, trying to figure out. We have Jackson Hole Symposium, all these things coming into play. We are trading back above the 100-hour moving average at 136.716. But we have to be cognizant of the up and down price action, maybe the desire to not go too far ahead of the symposium. That may cause some up and down price action. On the downside, we can watch this 136.25 level on the top side, move above the 137.15 level, and we start to move toward our high prices that we saw just yesterday, near 137.70 on the top side. Off the daily chart, this is what it looks like. We're still well below the high price that we saw in the month of July, which moved up to 139.38. That was the highest level going back to 1998 or something like that. So again, a long time ago. But we are seeing a little bit move back to the upside after a decline yesterday for the dollar versus yen. Take a look at the sterling versus US dollar. If you take a look at the weekly chart, this low price came in at 118.40. Okay, 118.40. And the low price in 2002 is well, or 2020 is well lower at 114.083. That's the pandemic sell-off through here. In trading this week, the price fell below, and last week as well, and this week as well, we fell below the 118.40 level, trading above and below it. Remember that 118.40 level, because if you go to the hourly chart and you take a look at the 100-hour moving average, the 118.40 level is right near the falling 100-hour moving average, which has done a pretty good job of keeping the price below it. We did move above it briefly here, but really since this date, August 12th, the price has been able to stay below that 100-hour moving average, sans 1 hourly bar. So it 118.40 level on the weekly chart, 118.38 level on the hourly chart represents a key risk and bias defining level in the short term. It would need a move above that level to give the buyers some hope that a low is in place. So keep that level in mind. Alternatively, the 118-ish type level right here should be resistance for this pair. That stay below that keeps the sellers more in control as well. As you can see in trading here today, the market came down toward that 118 level, bounced, then fell below it. So around the 118 level up to 118.06 is resistance on the top side. We are trading currently at 117.74. Let's take a look at the dollar versus Swiss. Dollar versus Swiss moved above the 100-day moving average. That's not unusual. The last 3 days, the market's moved above and below that level, as a matter of fact. And we went above it here, went above it here. Now, it should be a bias-defining level, and we have to respect it as such. We'll watch that level at 116.54 in trading today. If the market's able to stay above that level, now that it's broken back above it, the buyers would be in more control, looking toward the 61.8% retracement of the move down from this high going back to July 14th or thereabouts. So that would be the next upside target for the dollar versus Swiss, along with the high price that we saw in trading yesterday, which went up to around, I don't know, 92 on the top side. So those are targets on the top side. As long as the price can remain above this swing area, the buyers remain more in control, and above, best case scenario is staying above the 100-day moving average. If we move back below that level, disappointment sets back in, and we start to rotate back to the downside for this currency pair. Dollar versus Canada, what's important here is the basing against the 100-hour moving average, moving back to the upside. Oil prices have been moving back to the upside, so the dollar moving higher against Canada is going against that typical trend. If oil prices go higher, then the Canadian dollar tends to go. Well, actually, it is. It's oil prices go higher, the Canadian dollar tends to go higher as well. And what are we seeing? Seeing the Canadian dollar go lower. So be cautious about that potential. A limit to the upside, but we are, as long as the price remains above the 100-hour moving average, the bias remains more in that direction. Finally, the Aussie versus US dollar. If the dollar Canada is going above its 100-hour moving average, the Aussie versus US dollar is going below its 100-hour moving average. Both are dollar buy bullish plays. The 100-hour moving average currently comes in at a nice round number of 0.6900, and the current price is trading at 0.6889. So below that 100-hour moving average keeps the bias more to the downside. Move back above it, and we have this swing area. Remember, last week, I guess, the price came down to test the 61.8% retracement and this swing area. And each of the time the market found support, bounced up, found support, bounced higher. Yesterday's high moved up to the 38.2% retracement. This moved to the downside, keeping the sellers more in play and pushing the price to the downside. So sellers remain more in control. The buyers had their opportunity, couldn't take advantage of it, and sellers taking back more control with the price moving below the 100-hour moving average. There you go. Wrap around the Forex market. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.